Hey, what's going on, everybody? What's going on? I hope you guys are having a wonderful day. Welcome to the Black Financial Channel. My name is Dr. Boyce Watkins, and today I'm going to talk about why so many companies are declaring bankruptcy and why this could be the beginning of a big wipeout for some of these companies that are not prepared to deal with current economic conditions. So get comfortable, buckle up your seatbelt. We're going to get started on the Black Financial Channel right now. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we talk about Black wealth and Black economics every single day. And we focus on the B1 philosophy. B1 means we are Black first. Doesn't mean you have to be Black to be here. We don't hate anybody. We just love ourselves. And if you love being Black and you believe Black people deserve the best and you believe that Black lives matter and that we can actually build wealth together, put a B1 in the chat, hashtag B1. All right, so let me start off by saying that that right now we're kind of in this interesting economic environment. What's going on, El Haj in Atlanta's Black Wall Street? Good to see you. Let me know what city you're from. And in this environment, you're seeing a lot of uncertainty right now, right? You're seeing the debt ceiling negotiation, which is still kind of rocky. You're also wondering when this recession is going to pop up. There is still recession talk among the experts. But one of the things that hasn't been discussed as much is the emergence of a lot of bankruptcies. A lot of companies are going bankrupt that were doing really well in the last 4 or 5 years. A lot of these companies, like Vice Media, were worth several $billion just literally 3-4 years ago, and now these companies are just getting sunk. They're getting their butts kicked. It's really ugly. And I was reading an article about it this morning as I'm getting ready. I'm actually flying to Dallas tomorrow for our Black Wealth Summit in training camp. So if you'd like to join us in Dallas, it's not too late to fly down. Just go to boycewatkins.com. You can get the information on that. But anyway, the article that I read was on Insider, and it says Vice Media headlined a group of 7 major companies that filed for bankruptcy in a recent 48-hour period. So in just 48 hours, 7 major companies have filed for bankruptcy. Now, bankruptcy does not mean the company's dead. Bankruptcy does not mean that they're never coming back. Bankruptcy does not mean that they are just financially washed out and devastated. But bankruptcy does mean that they need help. What bankruptcy actually is it's kind of an incubator that allows, or it can be, right? It can either be a liquidation where it's just like, okay, game over, sell your assets, you can't play anymore, right? Your creditors are sick of you. And when creditors pull their support, when the banks pull their support, when your investors pull their support, it's kind of a little bit like a run on a bank. When a run on a bank is basically when depositors say, we're not supporting you anymore. We don't have confidence in you anymore. So bankruptcies can result in a liquidation, but sometimes it might just be a reorganization or a restructuring. It can become like an incubator for a little baby, where you have a little baby that's born premature, and they say the baby's going to live, but we got to give the baby some space to kind of be safe and comfortable and get nutrients so he can grow, right? So bankruptcy protection protects the company from its creditors for a limited period of time. There are conditions under which they basically say, look, just back up for a minute, let this company breathe, let them get their cash flow, because a lot of people don't know this, but most companies that fail, they don't fail due to a lack of their ability to make money. They don't fail due to a lack of profitability. They're more likely to fail due to a lack of cash flow. Cash flow is like water in the body, right? Water, not being dehydrated for a long period of time will kill you faster than almost anything else. So ultimately, these companies need hydration. They need liquidity, right? Now, the interesting thing, though, the problem, though, with some of these companies like Vice is that they're getting killed because they allowed themselves to inflate under these extraordinary conditions that existed over the previous decade. Money was super cheap. Interest rates were super low. Companies like Vice Media got bloated like big fat balloons because they were allowed to just borrow, gobble, 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 grow. So then when you get to a situation like now where everything's real, where the economy's starting to make sense again, where actually it does cost money to actually get money, right? Where there is a real cost of capital. Now these companies can't survive. right? These companies can't survive because some of them kind of became almost like zombie companies. They were living off the bank. They were living off the debt. And a company's not supposed to do that. It's like a kid living off their mama. You're supposed to live off your mama for a few years, and then you're supposed to become a man and live off yourself. Well, a lot of these companies don't do that. They're 45 years old, still living with their mama, and then the mama cuts off support. Well, what happens to the 45-year-old where his mama puts him out of the house? And next thing you know, he's homeless, right? I knew somebody like that. He was 45, living with his mama. His mama got sick of him being there because he thought he was a grown-ass man, but he wasn't grown because you're living with your mama, you're 45, and your mama's paying the bills. Well, when his mama put him out, he had nowhere to live. He did not know how to survive on his own. So a lot of these companies, instead of living off the nipple of their mama, they're living off the nipple of the bank. So the bank provides an economic nipple that is keeping these companies alive, keeping them afloat, allowing them to just live their best life, free and easy. All we got to do is grow. We don't have to worry about making a profit. Profits are for grown folks, right? Follow what I'm saying here. Give me a yes if you get what I'm saying. So what happens then, just like that 28-year-old who's living with his mama, still not having to worry about paying bills, when suddenly you're in an environment where you have to pay bills, you're screwed, right? When you're suddenly in an environment where you have to actually handle grown-up responsibilities, you're in trouble. You know, when these companies like Vice are being asked, like, hey, okay, now you got to make a profit, man. You're making money and you're growing. Everybody's seeing you. You're shining. You're flexing for the gram, right? Because you got these big subscriber numbers, but you're not making a profit. Why are you not making a profit? Well, because you're not living below your means. Follow this analogy. This actually relates to life. This is life, right? Right? You saw the other day, I did a conversation with my good buddy Tierra KJ Williams, who's a talented actress out in Hollywood. And she's Miss Black Hollywood on Instagram. If you want to check her out, she does excellent work. And we were talking about Gabrielle Union and how anybody else see that? Gabrielle Union did an interview where she said something that absolutely baffled me. She said that despite the fact that her and her husband Dwayne have made millions and millions of dollars, they literally she's paying all 50% of the bills, and she said has tremendous amounts of financial anxiety because she's worried about whether or not she's going to make enough money to stay afloat. She worries like, okay, is this movie going to do well enough for me to be able to provide for my family? And I'm sitting there thinking, my Lord, you're not financially secure yet. Y'all old. Y'all almost 50 years old, if I'm not mistaken, 45, whatever your age is. And you still haven't got to the point where you've got a cushion in place. You still haven't gotten profitable. You're still in the negative, or you're still check to check. I don't know. I'm not saying this is true. I'm saying if it is true, it blew my mind. So I said either Gabrielle Union has experienced some tremendous financial trauma from her childhood that creates an illusion in her head that she might go broke. Because you have people like that. You have people that grew up in so much poverty that they're, no matter how much money they have, they're always afraid of losing it all, right? So that could be a possibility, right? Or it's a case where, nobody really talked to them about what it means to create a financial cushion where you get to a point where you don't have to work anymore. Because as beautiful as Gabrielle Union is, one day she's going to be a tired old woman and she's not going to want to get up and go and do a new movie every 3 or 4 months or push some new project or go put their kids on social media to get extra attention from Hollywood. All that stuff, all the shenanigans, all the chaos that's kind of around them. So anyway, I know y'all didn't expect me to go from talking about company bankruptcies to Gabrielle Union, but it's all connected. It's all connected to this basic idea in finance that I really want you to understand. It is that you have to always prepare for all different economic conditions. One of the biggest mistakes people made in 2017 is they thought that it was going to be 2017 forever. And then 2018 came, 2019, 2020. Every year, things were different than the year before. We're in 2023 right now at the time of this recording. 2024 is going to be different. 2025 is going to be different. Every year provides unique challenges and unique opportunities, and you have to constantly adjust and constantly be prepared. So when times are good and you're making that money, like Vice Media was making a ton of money, that, in my view, would have been the time to say, okay, I know we can keep growing. We could grow our subscriber base by another 1 million people, but instead of growing, let's get cash flow positive. Let's see if we can chop down some of this debt so we can maintain that debt capacity in the event that we actually need to go to the bank to get ourselves out of a tough spot. Let's go ahead and put some nuts in storage. Store some nuts for the winter so that when times get hard, we'll have a supply to go to. Everybody should have that. Everybody should have an endowment. Universities call this an endowment, which is basically a big pile of money they stockpile to prepare themselves for a rainy day. So the question I ask you as Black people is, do you have an endowment? And if you do not, how do you get one? And if you don't have one, if your children don't have one, are your children going to have an endowment by the time they're 25 or 30? Because that will make the difference in their life between being free and being a corporate slave. Do you want your children to be slaves on the corporate plantation? If the answer is no, you got to get them an endowment. You got to teach them these principles. Humility, live below your means. I'd rather be a person who makes $60,000 a year who lives below his means than to be a person who makes $120,000 a year who is living paycheck to paycheck or living above their means. I literally, because the first person is going to have a surplus, the other person is going to always operate on a deficit. The first person is going to create bigger and bigger financial opportunities. The second person is going to create bigger and bigger financial problems. The first person is going to have the relaxation and the well-being, the psychological well-being of being financially secure. The other one will have the constant stress and agony of being financially insecure, losing sleep at night because you're trying to go make another dollar to get you through whatever the next situation is that you have to get through. That is really hard to do. And it takes a lot of planning and preparation. So the reason I think companies like Vice, and there are a few others that they mentioned here in this article, it's all in insider.com. They said data from Moody's suggests that the bankruptcy trend is just getting underway. The ratings giant expects defaults for companies with speculative grade debt to rise to 4.9% by March of 2024, up from 2.9% at the end of the first quarter of 2023, and exceeding the long-term average of 4.1%. S&P's global reading of the situation isn't much more promising. It sees the default rate for junk-rated companies. These are companies that take a lot of debt that were relatively risky. They see this doubling, more than double the 1.7% figure, getting to 4% from 1.7%. A separate look at private bankruptcy is arguably even more troubling. As of early April, UBS found that private filings were outpacing even the early stages of COVID, when many firms went under. A 4-week moving average of 7.8%, I guess, registered in late February, handily exceeded a comparable figure of 4.5% reached in June of 2020. So effectively what they're saying is that a lot of companies are declaring bankruptcy. There's more to come, but this is kind of a double-edged thing because right now, in case you haven't noticed, the stock market has been raining money. Even today, the stock market shot up again because the debt ceiling negotiations appear to show some favor, some promise, some hope. I have no idea what that's going to look like and when it's actually done. But effectively, money is being made. If you've been a consistent investor in some of the strongest companies, and I've told you about the ones that have done really well for me, Google did well for me, Netflix did extremely well, almost 80, 85, 90%, something like that, ROI. And there are a few others, Microsoft, all these companies are doing well right now. And I think they're going to continue to do well. But the companies that don't have access to cash are going to be in trouble. Why? Well, because suddenly the cost of cash went up. And companies like Vice, they have no business being bankrupt. BuzzFeed has no business struggling near bankruptcy. All these companies had tons of subscribers and were making a crap ton of money. I don't understand how you're making $500-600 million a year and you're still running around like you're in poverty and still barely getting by. The only way that happens is you got cocky, you let your fixed expenses get insanely high, and you put yourself under so much debt that you had very little margin of error in case something went wrong. This is an important lesson to understand as you build your business. Really think about cash flow and think about changing economic conditions. You don't want that to kick you in the butt. All right, guys, that's really it. If you could do me a favor, please hit the thumbs up button, thumbs up, share, subscribe. I'll be in Dallas this weekend, 19th and 20th for our Black Wealth Summit in training camp. So if you are B1 and you want to get around other Black wealth builders who are thinking the same way you are to start businesses together, investment clubs, all that, feel free to join us in Dallas. Just go to BoyceWatkins.com. Also on BoyceWatkins.com, I have a lot of good resources for you, a list of AI stocks that I believe in that I'm invested in. I have a list of Chinese stocks that I'm invested in that I really like. There's also some other stuff on if you want to learn about stock options, all that. So feel free to go take a look. We're doing our best in the Black Business School. Just a reminder, we have the only Black financial therapy department that I've ever seen, and we work with the best therapists in the world to deal with the financial barriers to building Black wealth. So that issue with Gabrielle Union, my wife, who's a licensed therapist, we're going to do a pillow talk podcast episode about that, because financial anxiety is real. It happens in a lot of our families, and financial anxiety doesn't just haunt you for life. It also causes you to not be willing to take the chances necessary to actually build wealth or start businesses or even have healthy relationships. So you got to deal with these things. You must deal with the mindset before you actually get to the money. If not, you have situations like NBA star John Morant, who's throwing away $300 million, his $300 million contract, because he wants to be a thug. So if you don't think mindset matters when it comes to money, you are out of your mind. So anyway, oh, and by the way, my new book is called The 10 Commandments of Black Economic Power. It's a bestseller on Amazon. So thank you guys for supporting it. I recommend taking a look at this book. I know you're going to love it. The reviews are extremely good. So have a good day, everybody. God bless you. And thank you so much for listening. And I shall speak with you very, very soon. Peace.